Welcome. In this video, can XCN coin be listed on Coinbase? We will analyze this. Don't forget to subscribe, like, and please watch to the end to understand. Let's first analyze the price and then see if it can be listed on Coinbase. A careful look at the chart reveals a very meaningful and promising pattern, a small but effective descending wedge pattern. In the world of technical analysis, the track record of this pattern is mostly positive and provides a strong signal for a price reversal. Being able to recognize this small falling wedge in the current structure is a valuable observation that can be a precursor to potential future rises. The descending wedge pattern is a structure that is usually seen in falling price movements, but signals that the decline is weakening. In this pattern, both the lows and the highs are bearish, but the lows fall more slowly and at an acute angle. This indicates that selling pressure is fading and buyers are slowly gaining control over the price. The fact that this wedge pattern has formed, albeit on a small scale, suggests that the price correction is coming to an end. This is because such patterns are usually broken in a bullish direction, followed by strong price action. In the current situation, the fact that the price has started to hover near the upper line of this descending wedge structure suggests that the possibility of a breakout is getting stronger by the day. Especially as the pattern continues to tighten, an upside breakout is highly likely to occur in the event of an increase in volume. As soon as the breakout occurs, this will be considered a major buy signal in terms of technical analysis. Even if it seems small, such wedges can be one of the first harbingers of trend reversals. Therefore, it is very important for traders to follow this structure carefully. In case the pattern breaks to the upside, the price is expected to test the resistance level at the beginning of the pattern first. If this level is also breached, the important peaks that have already been reached may become targets. Descending wedge patterns often appear at the lows and are a preparatory stage for upward movements. Therefore, this small wedge could actually be one of the preliminary signs that the price is about to resume its uptrend. Also, if the levels where this small wedge pattern forms overlap with strong support or demand zones in the past, this further strengthens the possibility of a breakout. In technical analysis, the coincidence of support and resistance zones and patterns are important elements that instill confidence in traders and shape their trading plans. Especially if the price has bounced off these areas before and is currently in a similar pattern, this increases the likelihood of an upward price reaction. In addition, if volume analysis also supports that this wedge pattern is forming in a healthy pattern, this paints a much more positive picture. Because a decrease in volume throughout the pattern and a significant increase in volume at the breakout is one of the biggest indicators that the move is valid and sustainable. In the current pattern, there's a slight decrease in volume, which is in line with the classic descending wedge process. In other words, the market is calming down, sellers are getting tired, and the ground is being prepared for buyers. An explosion in volume at the time of the breakout will be considered as the starting signal of the uptrend. It should also be noted that such small-scale wedge patterns are important signals for short-term traders, as well as for medium and long-term traders. This is because a breakout of this pattern can change market sentiment and strengthen bullish sentiment. This leads to buy orders that can push the price to higher levels. In other words, what looks like a small technical detail could potentially be the starting point of a big move. Once the upper band of the pattern breaks, the price is expected to move towards its previous highs. In this process, investors who have just entered the market may also notice these technical developments and take action, and the upward momentum may accelerate further. But we can't decide the analysis only with the pattern. Let's look at other metrics. Keep watching. A close examination of the chart reveals a very characteristic Elliott wave theory structure, and price action is currently in the second wave, in line with this theory. According to Elliott wave theory, prices move in a cycle of 5 waves, 3 upward impulse waves and 2 correction waves in between. The current second wave represents the classic correction after the first wave. Therefore, it is natural and expected that the current price movements will be sideways or slightly downward. Second waves are usually periods of market indecision, when investors take a short breather after the spike in the first wave. At this stage, the market is both digesting the previous rise and gathering strength. That's why the price may be moving sideways at the moment, but this stasis is like the calm before the storm. Because once the second wave is complete, the next phase is the third wave, which is theoretically known as the strongest and most voluminous impulse wave. The third wave is when investors gain confidence, the market confirms its upside breakout, and buyers step in with more vigor. The most notable aspect of the third wave is that it usually extends between the 1618 and 2272 levels, according to Fibonacci projections. These technical ratios have been proven countless times in the past and are highly trusted targets among traders. Although the price, which is currently moving inside the second wave, may appear to be stable in the short term, it may actually be preparing for a big rise. This is because second waves are not only a correction, but also a process of gathering strength. At this stage, investors may need to wait patiently for the start of the third wave without acting rashly. Because when the third wave begins, the price usually rises so quickly and strongly that it can be difficult to get on the train later. Therefore, for investors who can analyze this period correctly, the second wave creates a window of opportunity. The current sideways movements may be a sign that the price is trying to gather its strength and momentum. It should also be noted that second waves can often retrace up to 50% of the first wave. However, the important thing here is not to go below the starting point of the first wave. Analyzing the current price structure, it seems that the second wave adhered to this rule and went through a deep but healthy correction. This is actually an indication that there is a solid ground for the third wave. Technically, this is a very positive signal and the price can be expected to turn upwards in the coming period. When the third wave starts, the price usually quickly reaches the 1618 Fibonacci extension first. This level is of great psychological and technical importance, because reaching this level is proof that the market is in a strong bullish momentum. Then, if the uptrend continues, higher targets such as 2272 come into play. These levels usually represent the point at which the trend matures and offers traders big gains. Therefore, when the second wave comes to an end and the third wave begins, traders are stepping into a stronger process, both technically and psychologically. At this point, it is also worth mentioning volume analysis. A drop in volume in the second wave may be a sign of indecision in the market. However, the rapid increase in volume when the third wave begins indicates that this is a valid and strong bullish wave. So not only the direction of the price, but also the behavior of the volume is an important data confirming the start of the third wave. On the other hand, a price action that is currently in the second wave is often a period of early entry opportunities for traders. Because when the third wave begins, the price usually rises rapidly and favorable buying levels are quickly passed. In the cryptocurrency market, the listing of a token on a major exchange usually marks a major milestone. At the moment, the developments regarding Chain XCN indicate a very positive and promising process that investors should follow carefully. In particular, Onyxcoin's announcement could be a huge potential jumping-off point for the XCN token. Onyxcoin's launch of optimized support for Coinbase Wallet and the Base network, as well as the ability for users to connect to the Onyx AI agent directly with the XCN token, represents not only a technical update, but also a very important strategic step that will allow XCN to engage with a wider audience, expand its use cases, and attract new investors. Such integrations are not just a technological advancement in the cryptocurrency world, they're also among the factors that directly affect the adoption, circulation, and demand level of a token. Because it's not just technical analysis that plays a big role in the appreciation of crypto assets, but also the use cases and institutional collaborations behind them. The integration of XCN with the Onyx AI agent shows that this token is no longer just an investment tool, but an asset that has a real function and is actively used within the ecosystem. This news, especially with direct contact with a major US-based platform like Coinbase, strengthens the possibility of a possible listing, which XCN investors are eagerly awaiting. Coinbase is an exchange that serves millions of users around the world, places great importance on regulation, and applies rigorous evaluation processes to its listings. That's why a listing could happen. Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risk correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.